1 second.
I'm
Hey, Jordan.
Hey, how's it going?
Hey,
Good,
Jordan.
good, good. You feeling okay?
I'm having wicked allergies.
You look you look under the weather a little bit.
Yeah, I don't feel very good at all,
I'm
actually.
gonna be right back.
Yeah, no worries.
How we doing? How you feeling about the software, Kamal?
I'm very comfortable with it.
Good. Seems to work well.
I really like it. This blows GoToWebinar, especially for the price point, out of the water.
It does. It does. If the only downside, if the video is as good a quality, we could switch to it entirely.
Yeah, and I think it's just better for the interview style formats. Because if you were doing a permanent screen share, I don't know how it works.
Yeah. Agreed.
But I love this thing. It's pretty cool.
Oh yeah, it's nice.
So, I think it'll probably get better too, because Google Hangouts is relatively new sometimes. But it's pretty good. So we are live. Let's just wait a couple seconds, Paul, and make sure that everybody gets in okay.
Okay.
Boom, 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 boom. So how'd you get the allergies, Jordan? Is this I never noticed Indian people with allergies.
Oh, I've got them.
Do you really?
Yeah.
So I'm always surprised when I always hear everybody like, we got allergies to peanuts and moths and it could be anything. They got allergies.
I have no food allergies, just seasonal allergies from pollen or whatever.
Oh, yeah. It's starting to bloom over there in New Hampshire, huh?
It is. Stuff finally green for our 1 month of summer.
Paul, where were you in Minnesota? Were you upstate or by Minneapolis?
I was right in the St. Paul, Minneapolis area, right in the Twin Cities. Yeah, I loved it there. But yeah, we got 3 months of summer, and the nice thing is, people really. I mean, you're from Michigan, so in the summertime you really appreciate it. You just get out and do stuff.
I know. The question is also though, it's like you really appreciate it, but is it better just to have it all the time so you don't even have to appreciate it?
Yeah.
That's how
I'm in California now, where the weather's always above 70. Right now it's over 100, and nobody's outside. In Minnesota right now, everybody is outside.
Yeah, that's true. 100 gets hot. We're on the beach here, so even if it says it's 100, it always feels like 80.
Yeah.
All right, we got everybody walking in. Hey guys, how y'all doing? Brian, we see you. Mr. Cox, how you doing? John, how you doing, brother? What's going on? All right, guys, give us a second. We're just kind of walking some people in and stuff like that, and then we're going to get this party going. So, Paul, you got 2 kids, is that right?
I have 2 kids, 10 and 7.
Oh, boy.
They're on summer vacation now, so it's made it a little tough to trade. So I've got 2 screaming kids on one side, then watch my stocks on the other.
That's got to be nice, though. I mean, that's like the nice thing about...
It's nice to, be at home, be able to spend time with them.
Like my dad was in sales, and like he was always cruising. Like you could have it could be anything, basketball games, anything. It's like he was just on the run.
Oh yeah. I get since I started full time about 2.5 years ago, and it's just been great. Getting to spend more time with my kids.
Do you get sometimes a little bit like antsy because you're just at home a lot? Like what do I do with myself? Because I had that problem when I was working. Like when I first. When you were first coaching me, and I was working, doing recruiting, I was trading all day and then, working and recruiting. So I was always really focused and busy. And then I noticed that when I started trading full time, my results were a lot worse than they were when I was working because I had too much time on myself.
Yeah.
I was watching too much TV. All right, I think we got
When I first started, I used to put a show on in the background. I stopped doing that because I
yeah.
lose focus.
You almost need like a very specific routine, just like when you're working. Just it's a different routine. It's like you
Yeah.
gotta exercise, wake up at the same time. I gotta make sure. Like now, it's like before I was like never showering. I would just roll out of bed and just start trading, and so I was never like focused mentally. So now it's like make sure you get in the shower and wake yourself up and do all that fun stuff.
It's funny. My wife works at home too, and when she started, she said she was going to shower every morning. She was going to get dressed in a business suit, like she was going to work, just to feel like she was in that work kind of mode.
Yeah.
And in a week, she was just in her pajamas all day, talking to clients on in her pajamas.
Cool. All right, I think we got everybody piling in here. So, guys, this is a part-time trader webinar. So we want to do this webinar as the last one we did was about 2 months ago when our service started, and Paul's been doing a really good job with the alerts and managing the program. For those of you guys that are new, Paul is actually my trading mentor. Many moons ago, this was during recession times, 08, 07, things of that nature, I believe. And I was having a lot of trouble with my method in terms of I couldn't make any money. I used to go on Paul's blog and make comments and stuff like that, and I asked him if he would coach me, and he was able to really round up my form and show me exactly what he does. And to this day, I've been using all of those type of things. And as I progressed in life and stuff like that, I found that my personality is more suited towards day trading, as I'm just kind of that type of person. But I still swing trade to this day, and I use his exact method that he taught me. And everything that I even do in my day trades are actually based on the system that Paul taught me on how to set up my charts, and everything came off his swing trading method, and then I started day trading around those swing trade setups. And so I'm really happy to have him along. For years I wanted to start a swing service, and I just only had one guy on my mind that could do this, and it just happened to be that Paul was in a place in his life where he also was looking for a challenge. And so we started off the swing trade service, and it's been going really well. I believe we're up to 150 or 160 members in it right now, and growing. And we have a new website that should be ready in a few weeks. And so on the new website, Paul is working with our developer to really put together a robust swing trading service and page with some education and really all the things that you would need to get started and kind of start learning this method. So Paul, welcome. Let me ask you just kind of how are things going, man? How are you? It's been a long time since you've been in the newsletter game. How are things going with you?
When you contacted me, it was right at the time I was thinking about starting up again. So it was almost like it was meant to be in a way. It happened literally. Like I thought about it a week earlier, and then I got an email from you. So it was perfect timing. I was ready to do it. It's really energized me because I had felt like I'd been trading full time for 2 years, and I wanted to try something new, and it's really been great. I love it. Communicating with the members, seeing all these people that are so passionate about trading really revved me up. So it's been great.
I find the same thing. I actually noticed that my results also are a lot better when I'm trading in front of groups or communicating with people about the trades. It just it focuses you up a little bit. You don't take the boredom trades. When I was trading alone, I have this bad habit of sometimes, because trading, like, I don't go out much. I'm not like the party guy or doing any of that stuff. So trading is like a lot of my fun time too. So sometimes I take on additional risk or trade excessively because it's just me. And then when I have my chat room and stuff like that, I found that it was really good accountability and focus to be teaching all day, that sitting there all these kinds of trades. It actually really re-energized me to work with and kind of show them the proper way to get started. So let me ask this, just to get started. So, 2 months now. What do you think about what's going on with the market? Look, a really incredible.
Kyle, this is breaking up here. I think I'm gonna have to log back in.
Log back in.
Can you give me a second here?
Yeah, no worries. So, guys, going back to it, one of the things that Paul does, swing trading, it works in really every type of market. I noticed, especially in these type of bull pushes, swing trading is as profitable as day trading because you get the market and it will run for 5, 6, 7, 8, 9, 10 days, and you'll see stocks really, really making moves, and they don't pull back. They don't pull back, and so there's really a lot of money in the swing trading. And so every time we get these type of bull pushes too, I dust off my IRAs and all that stuff and get right back into the swings because you can day trade around stocks for 30, 40 cents here and there, but sometimes if you have longer term accounts, holding the thing for the whole move, that $3, $4, $5 move, that 10, 15, 20% gain, that's where the real money is at, but it's the easy money because you don't have to sit there and babysit. One of the things before I came in with Paul was that I was an over trader big time because I was doing a lot of day trading and stuff like that. And I found that actually swing trading pullbacks and doing things the way that Paul does them, it helped focus my trading and really stop a lot of the over trading. So when Paul taught me his method, and I was going for the bigger chunks of gains, that it really stopped a lot of my over trading. And the other thing that I was doing that was so different, Paul, if you remember, I was always trading breakouts, and you primarily like breakout pullbacks. And so
especially for someone who can't watch all the time, if you're at home and you're watching, you can catch the breakouts. But for someone who's working or can't watch all the time, by the time you get to the breakout, it's usually broken out too far for entry to get a good risk ratio. So for someone who is part-time trading, the breakout pullback method is really good.
I noticed what I also did was it helped me. It prevented a lot of over trading for me because when you buy pullbacks, your parameters are really defined because you're buying a stock near support, so you know where your stop is. You have a very logical target, which is that previous high and things like that. So I thought that method of instead of buying breakouts and just chasing every tick and trying to time things, and you're really, when you buy breakouts, you're often buying stocks that are extended. Doing this really helped focus my trading and really stopped a lot of my over trading, in chasing breakouts, because that causes me to just go all over the place.
Because you're constantly trying to catch them, and then you get to one and it's gone a little too far. So yeah, the breakout pullback method is great for someone who can't watch all the time.
So why don't we go into kind of the document of the trades that you're doing, because I noticed you have some very specific setups that you've been really making some good money on. Let's bring that up and talk about some of these setups.
Okay. First, why don't I pull out the spreadsheet here. Just 1 second here. All right, can you see the screen here?
Yep.
Okay, so basically you'll notice here, these are the trades I've made for the report, and alerts have been sent out for every one of these trades. If you go over here to the setups, you'll see most of them in this market have been either bottoming formations, where stock looks like it's bottomed and is starting to show some accumulation in volume, which gives you an idea that it's going to bounce back. It's either been bottoming formations or the breakout pullbacks that we've been talking about. Majority of the trades, especially the winning trades, have been that particular setup in this market. Now, someone who's looking at this the first time may think that's the only type of setup I trade, That's not true. I adjust to markets, but right now that's the setup that's been working. So that's the one I'm going with.
So, Paul, let me ask you this, because a lot of people get these things confused. So, looking at your document here, what I notice here that really stands out, and what people always forget is so many traders are focused on their win percentage. I notice in our Click Fund, we have 200 traders, we track them all.
Yeah,
That
yeah.
usually, like if the trader loses their first or second trade of the day, they get really bummed out because they took a loss,
Yeah.
and that totally ruins their day. But what's worse is that it actually causes them to engage in more risky behavior because they got to make that money back. And
Exactly.
one of the things that I always talk to them about is, your win percentage doesn't really matter per se. I mean, it matters that you need to win some of the times to extract some gains. But whether you're at 60% or 65% or 62%, that's the drop in the bucket. Taking a loss is not a big deal because it just gets you to your bigger trade. And that's what I'm noticing on yours, is that your average win is much bigger than your average loss. So is your system focused? A lot of people are focused on probability, but it sounds like you're really focused in on reward to risk ratios. Am I getting that right?
Every trade I make has to have at least a 2-to-1 reward to risk ratio, meaning your target or the amount you're going to win is at least double what you could lose on the trade. And so I'm not focused on the win percentage at all. Basically, I don't care about a percentage. I care about making money. And if you have a 70% win rate, but your losses, a lot of people, they ignore their stops, they let their losses get too big, and they may have a 60-70% win percentage, but they're not making money. That's what it's all about, is making money. So with the results here, I've made 24 trades, right above 50%, 54% right now, 13 wins, 11 losses. But like you said, the average win has been over $1,500. The average loss has been $500. So that's a 3-to-1 difference, 2.8 to 1 difference. And what that's telling you is basically you could have a 36% win percentage and still break even. So a lot of people, I get a lot of emails about stock picking and setups. That's really only maybe 30% of the game. Most of it is trade management, managing your risk. That's really what it's all about.
So let me ask you this then, because this I feel like newer traders go through this all the time, and even professional traders. I noticed that, or so-called professional traders have this problem, is that so yeah, you take 1 or 2% losses, but all their gains are essentially the same size. So how do you fight the urge? Like if you're up. Because I know you, sometimes you could be up 3 or 4% on a stock, and you may not sell it or scale out. Sometimes you do, but not always. Sometimes you'll let it ride. So how do you fight that, or how do you keep from doing that so that you get the big game?
You go in with a game plan. Most of your hard work is done before the trade. Actually making the trade is easy. You've done the research beforehand. You know where your entry point is. You know where your target is, where your stop is. And it's kind of like I always say, set it and forget it. Set the trade, and then just set your stop, set your target, and then just forget it. I know it's hard sometimes, especially on a day like today, but you just have to fight that urge and just stick with what your hard work has told you to do. And then there's a bit of an art when you get to that target to deciding whether you're going to take the whole profit or whether you're going to do take a partial exit. The best trade is when you take a partial exit, move your stop up to entry, and you're not going to lose any more money, and it's just it's all about making a bigger gain.
Sure. So in terms of your targets now, a lot of people will always ask, like, well, I mean, what are some basic parameters of choosing targets? Do you go and just strictly use price as a measure to picking targets, or do you go and use some of the indicators or things of that nature and tie them all in together in a more comprehensive way, or is it straight price?
For my target, it's basically price, moving averages, Basically those two things. I don't look at percentage gains or Fibonacci's or Elliott waves or anything like that. It's just price action and moving averages.
Yeah, no, I think that's huge. One of the things I noticed with a couple of kids in my boot camp class was, because I teach them the stochastics, and so when things get overbought, obviously there's a probability that this stock is getting stretched, or well, it's just overbought, and so people often sell when they see something overbought. And it's like, well, that has nothing to do with price. It's like that's an indicator that's used to confirm some type of price action, but we don't use it. We don't use it for buy sell decisions. Stocks can stay overbought for a long time.
In the beginning, I used to focus a lot on stochastics and RSI, and I still look at the indicators. They are important, but basically they're just telling you what you see. They're just used for confirmation. What they're factoring in is price, volume, the things that you're looking at. So what you see is more important than what an indicator is going to tell you.
Gotcha. Now, I noticed some of these trades, so you've got some like larger price gain, 17%, 13%, 11%. So do you have a method? I mean, do you scale out of these trades, or are you holding the whole thing for that bigger chunk? How do you manage the trade?
Each trade is different. When I set a target, I set a stop, and then when it gets to the target, that's when I reanalyze the position. Is the stock oversold? How's volume been acting on the way up? How's the market doing? If you look today, the trade number 24, Musa, which I exited today, and this is unlike me. I exited before my target. My target was 52. I exited at 49.85, and that was basically a function of the market. Normally, I would stick with my target, but with this trade, just looking at the market conditions right now, I just decided to get out. So there's a lot of different factors. If the market was doing really well, and if it looked like it was going to be a strong trend, and it hit my target, then I might just do a partial exit, move my stop up, and see how it goes from there.
Gotcha. Why don't we dig into a couple of these trades and walk us through some of these a couple of these trades that you've taken?
Okay, sure. So I've outlined one win and one loss to help you see the difference between reward to risk, the setup, and the idea of taking big gains and small losses. So the first trade here is Yelp. It's the 15th trade here, taking on 610. 400 shares at 64.86. So Yelp had broken out here, and it was in a bottoming so this was kind of a breakout pullback play, but it was also a bottoming formation. So it kind of combined the two setups that I've been working on for the last month. So if you look at the range here as it had been floating up, the volume was really good. Lots of big up days, smaller down days, which tells you during this range the stock is being accumulated. So that gives you an idea that there's going to be a bigger move up. And another thing I wanted to point out here, a lot of people mistake when they judge volume is they don't look at it relative to what's been happening. They just say, okay, a big red bar, that's not good. But if you look at it here, you already had a bigger up bar on this gap up, and this big down bar, even though it was a high volume day, when I'm looking at this, I see it as a positive because it was less than what occurred before that. So same thing here. This looked like a bad volume day, but if you look closer, the stock barely moved. So it doesn't really have an effect on distribution or accumulation. So we looked at the breakout, looked at the volume pattern here was good, and it had pulled back to this trading range right here. RSI, I use indicators as confirmation, so when I'm looking at the RSI here, it basically confirmed a strong trend. If RSI had been dropping, that would be a signal that the stock is not as strong as I had hoped. So that was what I was looking at for the entry. And then we entered here within this trading range as the stock had pulled back. After a few days, it gapped up, and we actually did make two different exits. They actually ended up being pretty close together, but this was an example of the big gain versus a small reward. Here, it hit my target here. I think I had. Let me go back to the spreadsheet real quick. I had a 2.3 to 1 reward to risk. So basically, I was risking $984 to gain what would have been probably $2,500, and actually ended up making more, $3,500. So that's the basic idea behind the breakout pullback setup. And then here, can you see this canal? Canal, can you hear me? All right, I'm gonna have to pull out real quick. I'll be
I
right.
see it. Sorry, I muted myself. I see everything. Ah, where'd he go? All right, hold on one sec, guys. Paul's having some computer issues. He's in Central California, where maybe the internets are slower. I got you.
All right, Canal, can you hear me?
Yeah. Hey, Paul. A lot of people. Yeah, I
Were
can
you
hear
able
you.
to hear the whole thing before about the Yelp trade?
Yeah, I could.
Okay, all right. So I'll move on to the any questions?
One of the things that a lot of people have questions about is what's going on with the background in your room. A lot of people find it very creepy back in there.
Oh, really? Oh, really? What? There's a fan on. Other than that, it's complete. What do you guys hear?
No, we just see a mattress room.
Oh yeah. This is my kids are here, so I've got to go into the spare room basically. Be quiet. Yeah, there's no one. I'm not hiding anybody here or anything. This is the only quiet place in the house. So yeah. Okay, so any questions about the Yelp trade?
Not the moment. We'll get to them in then. It looks like some people are bringing them in.
Okay, so here's a trade I took yesterday that was a loss. Buffalo Wild Wings, BWLD. There was a strong breakout into new highs. The stock was forming a trading range here. It had pulled back really hard, which is actually not the kind of pullback I usually like. I decided to just take a shot and take the trade here. I entered. Let's see here. I entered at 158.77. Today, the stock pulled back down under the stop with the market, and the reason it hit my stop at I believe 156 something. But the reason I wanted to highlight this trade was from members. I got a lot of emails asking, should I lower my stop? I think the stock's going to bounce back. It's very oversold. But once your stop gets hit, you have to take that small loss. It's tempting because I do kind of feel like the stock might bounce back, but I can't risk taking a bigger loss. I'm really strict about small losses, and I don't mind taking losses as long as they're small losses. So here, I got out and for a $290 loss off a $100,000 account, that's really minimal. It shouldn't affect you at all. So today the three losses I had combined were less than my average win. So it's all about really managing your positions, managing your wins, your losses, keeping your losses small, and your wins big.
So the Buffalo Wild Wings, can you walk us through a little bit on the details of that setup? I know that it's a breakout pullback play. What else
Sure.
were you seeing in it that you liked about it?
Okay, well, I had been watching it for a while. Basically, once it started to get near its high, and I look for RSI. Basically, I know a lot of people use it as an oversold, overbought indicator. I don't do that. I use it to confirm trends and look for positive and negative divergences. So, if we look at the old high and you look at where RSI was, it was under the 70 level. Then when it broke out here, it broke out over the 70 level. So that's a positive divergence. So that told me, it was a confirmation of what we were seeing. You know, if the market hadn't tanked, I think the stock was really ready to go up some more, but you know, the market took it down. So, and I think eventually it's going to go back up now. It's just a matter of the market. But that was one of the things I was looking at. The other thing is during this whole accumulation phase here, range here, I was looking at the volume, just wanted to make sure there was nothing showing any major selling after this bottoming breakout here. And you know, it looked positive here. So those two factors really made this breakout appealing.
So Paul, you know, you're somebody with a job, or you know, you got a busy career or whatever. This type of trading that you do, you know, the breakout pullbacks, the bottoming patterns, all of this type of stuff, and the way you manage the risk and the liquidity of stocks. Can you do this without access to, you know, fancy tools and having to be at the computer all day? Like, could you have an iPad or a laptop, you know, and be able to make some of these type of trades?
Oh yeah, I mean that's what I did. I did it for 6 years. That's how I became a full-time trader. Was trading part-time. And, you know, I started with $5,000. I never put anything into my account, and that's what I did every day. You know, I had my computer at work, I had my phone, my laptop, did my research at night. You know, I'd come in to work with 5 or 10 stocks that I was looking at with entry points, and you know, you can quickly make the trades. And I probably spent during the day, you know, 15 minutes, 15, 20 minutes during the day managing my trades. There was some work done at night, but during the day while I'm working and when I was on break, when I had a few minutes, that's when I made my trades.
Nice. So now, one of the things that some of the people know, people don't ever want to give even an inch. So I tell people, you know, hey, you can trade with a job. You just have to do swing trades. And they say, well, I can't look at the stock market at all during the day. Can I can I set up all my trades pre-market? And I say, no. But I mean, what do you think? I mean, if you want to be a decent swing trader, I mean, ideally, how much time would you have to spend? Because I know all the homework's done at night. During the day, I mean, how much real focus do you have to put on your trades in terms of, you know, managing them or checking up on them, or, you know, any of that type of stuff? You know, how much time or focus do you think you need?
Well, you know
what
if you can, you know, like I was saying before, set it and forget it. It's just basically when you enter the trade. So just, you know, my daily procedure was I wanted to see the market open. So, you know, I tried to take a break around that time at work. I'd look at it, you know, once or twice, you know, maybe once at, you know, just before lunch and a little after lunch, and then I'd want to watch the close. And that was basically it. I'd look at my stocks 3 or 4 times a day. So it doesn't take a lot of time if you've got a job, you know, a busy schedule. It really doesn't for swing trading.
Yeah, I don't think so either. When I learned the swing trading from you, I had a really, really demanding job. I mean, I was working 70, 80 hours a week, and I was making no money day trading, and then I was doing the swing trading your way, and that's where I started really getting my groove. And I actually when I quit my job and started Bulls on Wall Street and all that stuff, I was still a swing trader. You know, I quit my job off the money that I actually made swing trading, you know, rather than I didn't make my richest day trading. It just happens to be that's what I'm doing now. You know, I got started and actually quit the job still doing the swing trading. So you can make a lot of money doing it, because it's not like what I thought happened with swing trading was I associated it with like, oh, well, you know, the returns, or, you're gonna have to play boring stuff because you can't watch it. And what I found out is, hey, you're still playing momentum names and hot
Yeah.
stocks. It just happens to be the parameters of how you structure the trade are different.
And when you exit a trade and you've got a 15 or 20% gain, which you rarely get if you're in and out of positions, that makes it pretty exciting at least during that time. So there's benefits, good and bad to both ways, and a lot of it is what fits your personality, and I think that the main thing is having the foundation, and you can kind of move on to what suits you.
That's true. I teach my guys in class. I say, if you can't trade from a longer time frame, how are you going to trade on a minute-to-minute time frame where there's so much happening, but you don't have the time to really think out a plan? It's a lot of it is instinctual.
Swing trading is a really good foundation for day trading. You're a good example of that. A lot of what you do is what you learn from swing trading. It's not necessarily the setups. It's just the overall learning how to trade, how to manage your trades, how to manage the risk. And I believe even a lot of the setups are very similar.
Yeah, it's still the flags. I still trade breakout pullbacks. The only thing I change would be like if I trade a breakout pullback, often instead of 20 SMA, which is our short-term trend and short-term moving average that we use on our daily charts, I added in a 9 on my 5-minute charts because I noticed 9 EMA tends to act really well for short-term bounces. At the open, you don't have much price structure yet, so the 9 EMA tends to be something that will work fairly well.
Is 9 MA what most people are looking at?
9 EMA is a pretty common one for momentum stocks.
See, that's the thing for me with moving averages as support as resistance. Price is the real support and resistance. The moving averages, I experimented with using different moving averages that not everyone is looking at, but really with moving averages, they work because everyone's looking at them.
You want the most well-used ones, yeah.
You want the 50, the 20, the 200, basically whatever everybody's looking at. I get emails all the time like, should I use an 11? Should I use a 15? No, no one's using that. Use the 20, the 50, because they're not real. They don't really exist. Price is what is real. But since everyone's looking at them, that's what you're going to use.
I see all sorts of stuff, and I've seen people use 65, 150, 40, and then they even change the ones on the different time frames. Like, well, if I use a 30-minute, I use a 36, moving average, and it's like, there's just no point,
If everyone started using that, then it'd be great. But if no one's looking at that, don't bother.
You and your 3 friends, or you read some obscure book and that guy uses it.
Yeah.
That's about it.
I still can't get out of my mind the room setting. I gotta put some pictures up here or something. Is it not bad?
A lot of people have been asking in terms of probability. So what's your opinion on like when you playing pullbacks, but you have larger than normal red sell bars? How does that change the structure of your trade or the probabilities?
It does change it, especially if it's on high volume. With the Buffalo Wild Wings trade I did today, the reason I still took the trade was because the volume was okay. So I thought maybe it'll bounce back. But generally, if you're looking at a pullback and there's big down bars with big volume, you want to stay away, or at least look for confirmation. Usually I don't wait for confirmation. I just let my risk reward take care of it, and if I get a small loss, it's not a big deal. But in that situation, I'll often wait for a little confirmation to see how it's going to handle that level before I enter.
One of the things I notice is, at least if the market's in a big bull thrust, waiting for confirmation costs you precious points on your RR.
Yeah. That's what I had. That's exactly what I had analyzed. I used to wait for confirmation because every book you read tells you to. And after a while, I started analyzing my trades, and I saw that I was giving up so much with my risk reward, and the amount I was going to lose by taking a few extra losses was not worth waiting for confirmation.
Yeah, confirmation can take a 5-to-1 trade into a 3-to-1, which, you know,
Exactly.
if you duplicate it over 1,000 trades over the year, I mean, that's the ball game right there between
Exactly.
a huge year and
Yeah.
not such a good year. And so
So, yeah.
confirmation in bull markets is kind of like, you know, the setups in bull markets, setups tend to play out as long as the market's in an up thrust. You know, that's my assumption. If the market stinks, then I might wait for more confirmation just because it's like, you know, I don't want to get stuck. Support doesn't really hold that well if market stinks.
Exactly. Yeah.
Paul, a lot of people are asking, who do you trade with? You know, what are the costs per that trade?
What are the costs for the trade? I use Option House and a few other brokers, but my main account is Option House, and you know I really haven't done enough analysis on brokers. But you know, I don't know, it's $4.95 now. When I got in, it was $3.95. So that's what you know, what I'm using right now.
That's true. And I noticed, like, if you have a tool like a TC2000 or an eSignal, you don't necessarily need the best broker with all the fancy tools. You just need the cheapest one.
You know, for swing trading, maybe for day trading, you need stuff, you know, that you can see right away. But for day trading, yeah, you know, you've got TC2000 stock charts. You're doing your analysis of the charts at nighttime, or you know, pre-market. So you don't need any bells and whistles. You just need you know, good commissions and you know, good entries, good executions.
So, Paul, I got a lot of people asking me, how do you handle placing your stops so that you don't get faked out of trades?
I do watch that very closely. If support is at 25, I will never place my support at 25. It will be at, you know, 24.75, 24.80. I'll give up a little more so I don't get stopped out where everyone else is going to be stopped out. I try to put it where everyone is not putting it.
Yeah, I think people, what they do is they overthink it. So they think that there's these algos and everybody gets wicked out of their trades. And so they say, man, maybe I got to break down and break up. But in reality, just having a looser stop loss, you know, takes some control.
Yeah, you might have to make your target a little bit bigger to get the reward to risk right, but you don't want to be stopped out where everyone else is. So I do loosen them a little bit. There's no exact method. I get that sometimes where, you know, they want an exact spot. It's really kind of an art, you know, just kind of seeing where you should put it.
Also, a few people have been asking about how do you, how much is a good amount for minimum capital you think to start a swing trade account?
You know, it really depends on you, what your expectations are. You can start with anything. I started with 5,000. So, you know, you just, I would say if you're, you know, a lot of people say if you've got only a small amount of capital, you should decrease your risk. I actually increased it a little bit. Right now, my risk for position sizes is usually 0.5 to 1%. When I had the small account, I would go up to 2, 3, 4%. You have to trade it a little more aggressively, be more selective with your setups, and you really have to stick to your targets and stops. Don't overtrade, and don't let your losses get too big. That's the main thing. You really have to stick with your stops if you're trading a smaller account.
And so, guys, when Paul says 2 or 3% risk per trade, what he means, he doesn't mean that's your stop loss per trade. What he means is when we talk about percentage risk, we're talking about if you do get stopped out, how much do you lose of your account? So, for example, if you get stopped out of your trade at 10% stop loss, you lose 1% of your account or 0.5% of your account. There's a difference between your risk per account and
so
stop
basically,
loss.
if you have a if you have a $5,000 account, you don't want your losses to be more than $100 or $200 a trade.
Dun, 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 dun. Drew wants to know, Oh man, I got a crazy echo today. Drew wants to know how much capital is necessary to try and do this full time.
Full time, you know, you've got for full time you have to be in the six figures, and then you know, probably, you know, at least two. I guess it depends what you're willing to risk and what your personal situation is, but definitely six figures. Although I've heard you, Kunal, you day trade with only 50,000, right? You never increase
Well,
it?
you know, at ClickFund, what we do, we give capital to all our students, and so usually you can make, if you're day trading, if you have even a $5,000-$10,000 account,
Mhm.
you know, you can make $100-$200 a day if you have decent skills.
Oh, yeah.
And then what we do is we add money to their accounts, you know, as they get more profitable. And then, you know, we take a percentage. So I might take 10% or 20%. But, yeah, when I started, is $40,000 account is kind of what I kept it at. And I still to this day don't need more than that. You know, I think if you have a $50,000 day trade account, with leverage, you can make really whatever you want in reasonable. But you have to have an intense amount of skills because with $50,000 in day trading, you can lose $2,000-$3,000 in a day too if you're not careful.
Yeah.
You know, so it's a riskier endeavor. You know, but it's also the reward is there where you can have.
You're using more leverage too, right?
Yeah. You know, a lot of my students trade $3,000, $4,000, $5,000 accounts, and some of them are good. But you need the skills to do it. You know, you can't follow along.
Yeah.
Let's see. Karen wants to know if you can only check on your stock a couple times a day. Do you ever use a trailing stop?
You know, I trail on my own. You know, if I've hit my target, I'll move my stop up to entry, but I'm not doing an automatic trail, no. But I always have a stop in place if I can't watch it, a hard stop in place.
So Megan and Matt Siegel, they got a good question. To follow your alerts, you know, to kind of maximize the potential, what do you think is kind of the minimum you should have in an account to really get the move out of it? You know, they have capital, but they want to know, really, do I put 20, 30, 40? You know, what do you think is a good amount?
You know, the more the better. I mean, it's really hard to say. You know, you can trade it with anything, but you know, obviously the more you can put, the better in it. But you know, I can't really give a number that, you know, you need this much to make this much. You know, it really depends on you, how much leverage you're willing to take on, what you're willing to risk. But you know, as you can see from this, from the results here, with a $100,000 account in, you know, 1 month of trading, we've made, you know, $14,000, and that's this isn't anything astronomical. It's not like one of my best trading months or anything. It's pretty, you know, it's a good month, but you can make good money with a decent sized account.
Yeah, this is a good suggestion. Think about incorporating this into your website. People have asked for, on the swing trade side, a specific area where students can chat to each other. You want to build almost like a forum or some type of apparatus where they can post charts and, you know, leave comments on each other's stuff. You know, we could probably build something like that pretty easy.
Oh yeah, I think that'd be great. That definitely would be nice. The other nice thing about it is, you know, rather than just giving alerts, I can come in and, you know, make some comments when I'm seeing in the market, maybe some stocks that are not on my focus list that I can point out. So yeah, that'd be a great idea.
Okay, cool. So we'll work with the designer and try to get something like that going.
Great.
Thanks, Preet. Good idea. Boom, 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 boom. Good question by Aaron. How do you change your approach to selecting trades when the market is overbought versus oversold?
You know, when it starts to get overbought, you know, oversold, basically the opposite. But when it starts to get overbought and we're still in a trend, I'll still take trades, but I'm faster with getting out, you know, hitting my targets. I might take stock out a little quicker than I normally would. I'll take the full exit instead of doing a partial profit trade. I decrease position size.
Okay. All right, just a couple more. I think we should be good to go. Karen wants to know how did she get your intraday trades?
What was that?
Karen wants to know how she gets your intraday trades.
My non-swing trades. Basically, you probably want to stick with Canal. just stick with him. I'm still you know, finding my way through day trading. So I'll let you know when I'm a pro at it. But right now, just stick with him.
Yeah. Couple more here. Karen wants to know how do we email Paul? Karen, Paul at bullson.ws. And Marcel wants to know, are the trades on your spreadsheet all your trades or just the trades that you do alerts for?
They are my swing trades. I do other stuff. You know, I do some day trading, experimenting with options and some other things, but those are my swing trades.
I think that's pretty much it. Drew says, no, Drew, Paul is trading full-time. He doesn't have a job right now. I think that's about it, Paul. Anything else you got for us?
You know, it's just it's been about a month and a half now, and it's been great. It's energized me. Really, I can't believe how smart and passionate the members are. I've been amazed. I think I've learned a few things just from communicating with people. You know, emailing people who tweet me. It's just been great. So anyone looking to join, I'm accessible. You know, you can email me. You can hit me up on Twitter. Always willing to answer questions. Even if you just want to take a free trial, just check it out. Just go ahead and try it. We love doing this. We love teaching. Kanal loves it. I love it. So yeah, give it a try.
Paul, and we'll do this soon.
All right, great.
All right, take care.
See you, Kanal. Bye, everybody.